Good morning, Jacob. Mr. Jacob Mitchell. I wanted to go ahead and make a quick video here. Nothing too crazy. I'm going to try to make it as short as possible. I do need to be a little quiet because the family is sleeping right now, as per usual. Okay, so this was just basically going to address some concerns that I'm trying to figure out that are just bugging the heck out of me. So I've got my trading platform here up. I know it's the 15-minute, but really it doesn't matter what minute it is. It's just candles, and I'm just talking about when you enter and the kinds of weird things that this trading strategy seems to be about. Okay, so let's get started. So basically, I've got the strategy out here. This is the engulfing scalp strategy rules. This is really just a I just put this together really quick because most of this stuff, I mean, it does matter. I know there's more rules that I'm probably leaving out here, but this is the major stuff that I can remember. I've got it written down somewhere else, the majority of, I guess, the rules. Okay, so first we plot our major and minor support and resistance from a top-down, like, daily, then 4 hour, I don't know, that's how I guess I would do it. Oh. Okay, so I didn't prepare for that. I forgot that it'll just like go way back here. Okay, so you would plot support and resistance from here. So if I like plot my support, I guess resistance right here, and then there's one right here. It's pretty easy to see, I guess some of them. That one's one, I guess. It's an area where there's a little bit going on there. And let's move a little bit more. So anyways, I was just trying to get to a point here. So you know what I mean. That's a top-down deal here. So you go to the 4 hour, you plot your support and resistance. You zoom in a little bit to find that good support and resistance. The areas that you need, the most recent ones. Obviously, I would be up to date, but I've rewound a bit so that I can see, because I don't want to be in the market right now. I just want to be looking at something here. Just to give you an example. Okay, where was I? Okay, so there it was. Yes. So this is where I was. I wanted to give an example. So you see that gap there. I'm not talking about the gap though. Okay, so in the strategy, zooming in a little bit. So we did the plotting, okay? The second one, plot major and minor trend lines. I know how to do that. You basically plot the, if it's an uptrend, you want to have the trend line underneath it, I believe. And then if it's a downtrend, you want the trend line to be above it as a resistance line. So if it's an uptrend, you use it as sort of a support, I believe. And then you take note of psychological price numbers, the price is approaching. Obviously, these are the ones you're looking for: bearish engulfing at 80, 30, 50, 00, and bullish at 70, 20, 50, 00. So that I've got this set up right here, and this is another question I want to ask. Here's this question. I guess number one would be: are you always looking for bearish at 80, 30, 50, and 00? And then always looking for bullish at 70, 20, and then of course the regular 50 and 0? Or do you sometimes find bearish at 70 and 20 and take those, and sometimes find bullish at 80 and 30 and take those? Because that seems kind of weird. If you do both, that seems kind of odd, but I'm guessing that you don't. So we've got an 80. So if you say price is coming up here, and it breaks 80 and closes on the 10-minute, not the 15. And then you move on to the next one, and bam, it comes down almost like it was using this 80 part as a resistance, and you have a bearish engulfing, right? It sounds like that's what this strategy is about. Of course, you don't. You said in your rules that you don't care if price doesn't go and all the way cover this wick. Let me get out of this cross mode. I want to do arrow. So you said you don't care if price this wick covers this wick. That seems to be unimportant. As long as it covers the entire body of this candle, then that's a valid engulfing candle. Am I right to say that? I think so. So anyways, and the next one, I guess this is your potential trade setup signal. The next part that I believe is part of the strategy is that you wait for this next candle or the next 3 candles to sort of confirm your move. And I believe that you would do that by waiting for price to go down more from this point, and at the okay, and then this is another question. So we got one of those questions. So question number 2, I hope you can remember question number 1 because I forgot it. Question number 2 is, are we looking for price from the second candle after the engulfing candle to basically to be 80% body at the 4 to 7 minute mark? So what I mean by that is by the time it's 4 to 7 minutes, I don't really know what I'm looking for. I've noticed this while I'm trading. It'll be 4 to 7 minutes and I'm like, well, price has gone down, but it's also gone back and forth. It's kind of bounced around. I don't know what's going on. And I don't know what's important to look for and what's not important to look for. Because price will go down and I'll be like, well, of course, I wish I was already in the trade right now because price is going down. But by the time it's 4 to 7 minutes, it kind of sit there and maybe shoot up. It'll shoot down. It'll shoot up. It'll shoot down, and then shoot up, and then up, and then shoot down, up, 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 and shoot down. It just goes crazy, and sometimes it does that. And actually, it does that a lot. It does that so much that it drives me nuts. I don't even know when to enter the trade. So 4 to 7 minutes goes by, and I have no idea what's going on, and I have no idea why that's even in my rules if I'm not even going to follow it. So I have this 4 to 7 minute thing here, and I almost want to delete it because I have no idea why I'm even waiting there. Because normally, the reason I say that is because normally, traditionally, when you're up on like the, like the daily chart, the 4-hour chart, when you see an engulfing candle, based on your rules, based on whatever rules that you might have, when you see the engulfing candle, and it's like this, it's real beautiful engulfing, bearish engulfing. If price breaks this little bottom wick, that is when you should be in the trade. And then bam, you should let that go. I mean, that would generally be what a lot of people do, and they could successfully trade that. But I've noticed in the smaller time frames, it doesn't work that way. Because price could easily break that and then shoot way back up, or just shoot up. It just is a kind of a mess sometimes. So these rules do seem to need to be refined. It looks like you've refined them in a way that makes you highly profitable and makes you able to predict the market. And I think that the predicting part of your ability to predict this is based somewhat on your ability to know what you're looking for when you wait the 4 to 7 minutes. At least that's my theory. I think that's part of the golden move there, is that yeah, sure, you've got this engulfing candle, but that doesn't mean much until you actually know that price is going in your direction. So you're waiting 4 to 7 minutes, and if price is down here after 7 minutes, after 4 or 7 minutes, then do you get in the trade? And if you do, of course, you'll write it out. And in this one, it sort of went up. And I think, as far as I know, if it goes up and sort of stalls a little bit, which I think, let's see, say you got in right here, 68, 72, 73, 74. Well, it doesn't quite go up 10 pips. And so maybe you would still be in this trade. It comes up again, see, it's sort of in consolidation. It sounds like maybe you would have sort of saw this as maybe a time to get out. And of course, if you stayed in, it would have gone down, and I think hit a take profit of about 10 pips if you take that. But that's kind of irrelevant, yeah. Or we're just sort of looking for the answer to this 4 to 7 minute thing. So that is kind of confusing. Let's see if I have any other questions. Okay, so I've got that. So I know how to deal with, these are basic Forex things that I already know about. I didn't really show them well in this video, but that doesn't matter because that's not the important part. So yeah, here, the engulfing candle does not have to engulf the wick of the previous candle, only the body. So I did want to ask one question about that. say you have like a body with a wick that's like way up here, and then the next one is like an engulfing candle that goes all the way down. It engulfs the body, but for some reason, it makes me nervous because there's this huge wick from the previous candle. And so if you have like an engulfing candle, say that you don't know what's over after this, and there's instead a giant, a bearish engulfing candle right here. Of course, yeah, and that's the 80, so that would be bearish engulfing. You've got the rejection. Would you take that? I mean, this seems, ignore that that's there, but like if there was a bearish engulfing here, and then after that price goes down, I'm guessing you would take that? Perhaps. Okay, so that's one thing. I've noticed that that's one big problem though. The 47-minute mark thing is so confusing to me. I have no idea what I'm looking for or why I'm looking for it. If I don't know the reason for why I'm doing what I'm doing, then I simply don't know what I'm doing. And that's the part I'm trying to explain. So yeah, if we, because say this was, see here we got the double zero, and price is doing its thing, but obviously it looks like my stop loss would have been hit if I would have taken that trade, and so on and so forth. So I've got myself into a mess of confusion because these rules are way more subjective than I had thought. When I had read, Niall Fuller's or Justin Bennett, I think that was his name. When I read their stuff, it was very structured. You have to have these rules set in place, and that way you'll be profitable, or you'll eventually be profitable more times than you won't. It looked like his analysis of the market would be correct more times than it would be incorrect. And so as long as you were able to analyze price action, the wedge patterns and channels, and stuff like that, as long as you could analyze those things, and then you wait for a break, say, of the channel, and then it comes back up to the channel and makes a nice pin bar, and price breaks exactly below the nose of the pin bar, get in the trade and take a 1 to 2 or 1 to 3 or 1 to 4 or 1 to 5 risk reward based on what you see price doing and how far you think the price will go based on price action, and you take the trade. So much simpler. It's weird because this is scalping. It seems like scalping would be simpler, but holy cow, it's definitely not. It's definitely much more difficult. There's a lot more subjectivity, and you basically have to, it sounds like, you have to know a lot more about how the price actually moves, like how price moves in one candle, and why it matters. And that reminds me of the other point. Okay, so say price, I remember you saying something in a video that we were Skyping. Price was like stopping at one spot, and you would say things like, just stay right there. If you just stay right there, if price just stays right there, I can get in the trade. And I remember thinking, I have no idea why he's saying that. Why is he saying that? Like if price stayed like right here or something. I don't know the significance of the level that you were talking about. The significance of price stalling at one area. I think you tried to explain it to me, but it still went way over my head. I have no idea why, because none of this is anything that I've been taught in through the courses that I've been reading through Niall Fuller and Justin Bennett and Baby Pips and all of them. I've been trying to study my brains out, trying to figure out things, and I thought I was getting a good handle on things, but then I saw that you were doing some thing about, if price just stays right here, then I can get in the trade, but if it goes up, more, then no. Does that have anything to do with maybe you're wanting the candle to be 80% to follow the rules? So say price stalls right here, that would be good because it's almost 80%, and so you would want price to stay there, but if it backed up, then no? Is that why you said that? Okay, so there's probably a lot more questions. I'm going to go ahead and end it here, and we'll see how things go. I hope you're having a good day, and